Hey, nice to have you back with us once again. Welcome. Today we're going to be talking about education and loans into the education field. Joining me in the studio is David Scholtz, who is CFO of Eduloan in South Africa. David, nice to have you in the studio with us. Thank you for giving us some of your time. Tell us a bit about the company first. Where do you guys come from?
Okay, thank you for the opportunity, Jeremy. Basically, this company started up about 17 years ago. We saw the social need for financing education specifically. So the company started up, and we primarily focus on financing tertiary, secondary, and obviously primary education as well. Mm-hmm. But that's where we started, and the company has grown from strength to strength over the last 17 years. We assist mainly at this point in time your civil servant market, but we also do have product offerings for the broader public out there, specifically with regards to debit order business as well.
Okay, I was going to ask you about that, because that must be the most, I would imagine, one of the most difficult parts of being in this particular type of business, in any business where you're making loans, I suppose, is getting your money back. And you raised it there, debit order.
Correct. In the current market, as we know it, and we see also in the newspapers, in the media, the fact that there is what we call a credit bubble growing with regard to over-indebtedness. So people are struggling. The inflation rate is up, living expenses is going up, unemployment, etc., etc. So you do find that people are struggling to make ends meet, and that is important when it comes to actually offering an individual a loan, specifically educational loan. So you need to make sure that the individual can afford the loan. There are strict rules that we follow. Obviously, we need to look at it. We need to be seen as not being reckless in terms of providing credit. Mm-hmm. So you look at the person obviously up front, you score them, look at the credit history, you look at the credit profile, the repayment history as such. And if you've given them the loan, like you just mentioned, the fact that that's just the start of the relationship. The most important thereafter is obviously looking at collecting. And that is where obviously companies like us, we build a good collection as a system as well as team in terms of collecting our debt. So it's important, yeah. It is difficult. Debit order business, obviously we know at this point in time, people get paid the salary. Unfortunately, if they need to pay their bills, that will go out of their bank account first, and hopefully there is something left for us.
Well, I suppose the first model that you alluded to would be the easier one to work on, and that's simply taking employees of let's use the civil service for an example. As you say, there's a fair amount of business there. Employees who are in the civil service, and you're literally getting that money. It's almost a bit like a garnishee order, isn't it? That money is taken off their pay immediately by the government department.
That's correct.
So that would be the easiest way.
It will be, yes.
The second one, though, I suppose is a lot harder, because it's all very well when you grant the loan. Then it's all whoopee, yay, I'm off to go and study and my life's going to get better. But once you've finished your studies, you've got a few years of having to pay that back, and there's no whoopee, yay about that at that stage. Yeah,
Jeremy, just currently in the market out there, you'll have your normal, I said, banking product offering, whereby you will have a sponsor paying off, say, interest for the first couple of years until the student finish off the studies and moves on and gets employed. Thereafter, the capital amount and the interest needs to be paid. Our market specifically, when we look at financing individuals, we look at the market where people are at this point in time not getting loans from your, what we call your traditional bank, and also our problem also do not qualify for the National Student Fund Scheme, NSFAS money specifically. So there's a gap there. So the people on the one side, they can't afford bank, or they can't get a bank loan, and also they can't qualify for funding from the government. So it is important to look at that, but it's a lot easier, as you just said, in terms of salary reduction, if you have an agreement with the employer, to get that, say, bite at the cherry first. I mean, if you can call it at that. So you will look at, and that will mitigate your risk of debt and bad debt specifically. But you offer a product to an individual that could not get credit anywhere else. Okay, so that is important.
But having said that, isn't that then a very risky market? If you've got somebody who's coming to you who hasn't qualified or can't qualify for a government grant, who cannot qualify for a university grant, who is not being given a grant by a student loan by a standard sort of bank, your traditional bank, and can't get a bursary, isn't that the risky person then?
It is a risky person, but our philosophy is you need to see how you can actually assist anyone that obviously likes to study. But you need to be, like I say again, you can't provide reckless credit to anyone else recklessly in that sense. It's important to, and it is a risky environment. So you need to mitigate your risk in that sense. The salary deduction allows you to do that. On the debit order side, obviously you'll go through the scoring criteria as I explained a little bit before, so that you do comply with the regulations. Obviously we are also a registered credit provider, and the National Credit Regulator does govern the way we grant loans to individuals to protect them in a sense. Yeah. I mean, you can't be seen to be reckless at all. The market currently has indicated we find it difficult. People are over-indebted, and it's going to a point where we need to find a solution to see how we can get people or more cash available to them to do things, not only basically living from day to day.
I would also imagine, though, on the upside, is if you go off and get some form of further education, there are chances that you will be able to improve your job prospects within the company that you're working in, or maybe for another company, and that may push your salary up, therefore giving you more disposable income to repay the loan that you've made. I would imagine that is also another way of looking at it.
100%. Like I personally see, you must basically distinguish between good debt and bad debt.
Yeah.
Good debt for me is basically, as you explained, you need to invest in a asset or something that will generate a return in the long run. For example, take a home. You buy it, you take out a mortgage loan on it, and you pay off. But over time, hopefully, it grows in value. So that's an investment. I see exactly the same with regards to education. What you will do, you will invest in your future or your children's future, and provide them then with the ability, as you said, after getting that education, to increase their income earning potential. As you just mentioned, perhaps in a company itself, promotion, or just anyone that at this point in time is unemployed to get a job. And that takes you a long way out of that, I would say, that poverty that you find yourself in, just to get across to a place where you can actually earn something and make something of yourself.
In the second part of the show, I just want to get on to the actual process and how somebody would approach you and look at other aspects of it. But just out of interest, and really this is just a thumbs up, more or less how many students has your company put through some form of education over all these years, and try and quantify it in terms of cash? I mean,
basically, we've assisted more than 700,000 students year to date.
700,000?
Yeah. And we also, which is a book value of about 3.5 billion that we've granted over the 17 years. So it's a significant amount, and we pride ourselves in saying that we've made a difference in our customers' lives. And yes, it is important. I mean, everyone would like to further their education, and this is just a way of us assisting and helping them to achieve that.
How do you raise that sort of capital? Where do you go to borrow money?
We go into the market. We have to borrow to obviously grant the loans. But yeah, we've got corporate investors, specifically the Public Investment Corporation assists us.
I think the PIC is involved in every company in South Africa somehow.
Yes, and obviously they see what we do for I would say South Africa Incorporated. I mean, that's very important for them as well. As well as one of the big four banks obviously assist us as well. So the long and short of it, you need to go out there and you need to be able to explain, and I would say get the point across that what you're doing and what investing in the company itself will allow a lot more people access to finance.
Having said that though, I would imagine that you having to borrow the money, even if it's given at a preferential rate to you, because of the nature of your business and what its contribution to the economy is or could possibly be, that the margins between what you can borrow at and what you can actually charge for the loan must be fairly tight.
It is, and in a declining interest rate market as we know it, we felt it in the last couple of years. But you're right, and like you say, that effective margin that you can earn, it has shrunk in the last couple of years. But we still, and I mean that is our value proposition to the market out there, is that we offer affordable loans to our customers. And we do, I mean, compared to, if you look at our competitors, we are, based on our model, we have very competitive interest rates that we do charge, as well as your normal banking fees, well, not banking fees, I would say administration fees and loan origination fees.
I want to go into the actual granting of the loan, how you would go about it. I'll come to you and want to advance my education, and you take me through the process, if you don't mind. That's what we're talking about on this particular show. We're looking at education and particularly loans for your education. We'll see you